Hello and welcome to the Sand to Pearls market commentary. Market week ending Friday, September 6th, 2013. Market breadth. With this past week's market advance, our bull-bear point and figure ratio rose from 0.96 to 1.07, advancing back over the line into bullish territory. The total count of securities in bullish or bearish patterns decreased 2% to 1,916. The count of bearish stocks decreased 4%, while the count of stocks in bullish patterns increased 7%. The Sand to Pearls PNF Market Breadth Summary Chart shows us a market now one consecutive week in bullish territory. Paid subscribers have access to the Excel data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking on Membership, and clicking Sign Up. For those who are interested, there is available a free 2-week trial subscription. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 6 points for the fifth rise in 15 weeks. At a positive 35.20 points, it continues below the November 2010 top, the January 2011 top, the November 2011 top, the February 2012 top, the September 2012 top, the March 2013 top, the May 2013 top, the July 2013 top, but above the March 2011 bottom, the June 2011 bottom, the August 2011 bottom, the December 2011 bottom, the May 2012 bottom, and the November 2012 bottom. Market Gauge Volume Analysis. In this week's volume analysis, the Russell 2000 ended in accumulation mode. In the last 2 weeks, it had 3 accumulation days and 4 distribution days. Of the other indexes, the S&P 500 deposit receipts ended in neither accumulation nor distribution mode, while the Diamonds Trust ended in distribution mode. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Russell 2000 ended in distribution mode. Momentum. At Thursday, August 22nd close, the CCI 20 had 6 days below zero to begin a downtrend. As we reported last week, the CCI 20 plunged downward at Tuesday, August 27th close, but we rejected the trade since the CCI 20 fell outside the plus or minus 50 range. The CCI 20 was below minus 100, signaling a likely whipsaw, so we did not take the trade. This week, the CCI 20 rose and now has 3 days above zero for a possible change of trend at next Wednesday's close. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 30 weeks ago, while the daily CCI 20 began a Woody's downtrend 2 weeks ago. The CCI 20 weekly got a valid zero-line reject signal for Monday, July 8th open. Last week, the CCI 20 dropped below plus 100, signaling our exit from the trade at Tuesday, September 3rd open. The result of this trade simulation was a gain of 128.83 points on the Nasdaq Composite, or $3.15 per share of QQQ. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and all the bottom 5 are negative. Bullish gold and silver now leads the bottom 5. Semis has entered the top 5. Networkers has left the bottom 5 and entered the top 5. Computer hardware has left the bottom 5. Bearish, oil continues in the top 5. Oil services continues in the top 5. Comp tech and banks have entered the bottom 5. REITs has left the top 5. Focus this week, just in case you didn't hear this news in the mainstream media, ZeroHedge.com has the story. Poland confiscates half of private pension funds to cut sovereign debt load. On Wednesday, Prime Minister Donald Tusk said private funds within the state-guaranteed system would have their bond holdings transferred to a state pension vehicle, but keep their equity holdings. The funds would effectively be left with only the equities portions of their assets. Even this would be depleted, and there will be uncertainty about the number of new savers joining. By shifting some assets from the private funds into ZUS, the government can book those assets on the state balance sheet to offset public debt, giving it more scope to borrow and spend. Finance Minister Jacek Rostowski said the changes will reduce public debt by about 8% of GDP. The reform is, quote, a decimation of the private pension fund system to open up fiscal space for an easier life now for the government, end quote, said Peter Attard Montalto of Nomura. Quote, the government has an odd definition of private property, given it claims this is not nationalization, end quote. If you have a pension fund, you feel very confident that it is safe, you might want to ask yourself, how much do I trust my government? With that happy thought, we thank you for joining us for this week's market commentary, and we hope that you have made provision for all of your investments to be safe as possible. We hope that you have a great week coming up, and wish you happy trading.